Next up, it's Shanta Gold. Shanta Gold is an East Africa-focused gold producer, developer, and explorer listed on AIM. Shanta has evolved from a single asset producer to a 3 million ounce resources gold company with a diversified portfolio of growth assets. The company is focused on its flagship asset, the new Luika gold mine located in southwest Tanzania. It has 2 other development projects at Singida in Tanzania and also in West Kenya. The West Kenya one has been the topic of a RNS this morning. You have a market cap of around 172 million, up 9% on today's news from West Kenya. Over to you, Eric.
Yeah, thank you very much, Donald. Appreciate being here tonight. Just to start off tonight, we have a special guest with us joining as well, Yuri Dubrotin, who is our group head of exploration. And we'll be taking you through some of the highlights we announced this morning from our West Kenya project, as well as covering the value proposition for Shanta, because it's, we think, particularly exciting around the exploration front. I should have said Happy Africa Day. May 25th of every year is Africa Day, and it's a pleasure to be taking you through the Shanta story. On the call also with me is Leslie CFO. Luke and I have worked together for many years. And as I mentioned, Yuri Dubrotin, who's joined us from Barrick at the start of the year. Yuri's a global gold expert with 35 years experience. He was part of the discovery team at West Kenya. He's lived and worked across all of the major Greenstone gold belts around the world and is a huge asset for Shanta. And so we'll be hearing a bit more from Yuri to cover today's results and the exploration plans at Shanta. I should also introduce our board, particularly Michelle Jenkins, who's just joined us recently. Michelle is also an exploration geologist and a chartered accountant. Moving along to an introduction on Shanta Gold. Some of you may know about Shanta. We are the 3rd largest gold producer in Tanzania. We have a diversified asset base across East Africa and Tanzania, now in Kenya as well. We're unhedged. We have a net cash position on the balance sheet, and we're trading at very undemanding multiples, 3.1 times EBITDA, 13 times earnings, and just recently paid our maiden dividend and trading on a 1.3% dividend yield. So very attractive from a fundamental perspective. And this excludes the growth in our portfolio. On the bottom side, bottom half of the page, you'll see here, we are owned by some of the most well-known household names in terms of shareholders, Fidelity, BlackRock, River Mercantile, all out of London, Odie Asset Management, renamed Brook, which has been a shareholder now for many years. Insiders and management own 6.5% of the company, well aligned with our shareholders. A brief introduction into the proposition. Why Shanta Gold? What's so exciting? Well, you'll see on the next page how we're allocating capital this year. And it's really important because a lot of that capital is being allocated to growth, predominantly exploration. Now, what we're showing on this slide is a comparison of how we're valued in the market versus what we think the value of our portfolio is. And we put down a few markers to give you that comparison. In summary, we think we're trading at about 1/3 of the value of what we can demonstrate. So we have 3 assets, the new Luika gold mine being the one in production, with significant exploration upside. And we'll take you through that in a few minutes. We then have the Singida asset, which is in construction. Again, exploration upside. This is a greenstone deposit in Tanzania. And then the West Kenya asset, the one we acquired from Barrick last year, the one we put out drilling results on this morning, 6 meters at 220 grams per ton, 3 meters at 72 grams per ton, and so on and so forth. Very, very exciting. The West Kenya project is possibly one of the highest grading undeveloped gold projects in all of Africa. It's 1.2 million ounces, grading 12.6 grams per ton, and it is in the heart of the Lake Victoria gold belt in just across the border from Tanzania. So we'll cover that in a few minutes. My final slide before I hand over to Yuri really is around how we're allocating capital and why we're doing so. You can see here that we have 3 assets as we've introduced, just under $35 million of growth capital being allocated this year across those 3 assets, half of which is in exploration and the other half is in construction at Singida. This is the most we've ever spent in exploration in a given year. Why are we doing that? Well, we are building on recent successes in past years of expanding or extending the reserve-based mine life in Luika. 2, upgrading the resources at West Kenya, and you can see that clearly in the results that we've published this morning, and also extending or expanding the resource base across our portfolio. And then 3, bringing a 3rd asset into construction and into production at Singida. It's really important to think hard about the dollars we spend in exploration. We believe we can generate multiples of value return on the dollars we spend. I'll give you an example. At New Luika in the first quarter, we added nearly a mine life, 1 year of mine life at 8 grams per ton on the back of spending about $500,000 of drilling. At West Kenya this morning, the results were absolutely staggering, and the inbox has been full from other gold companies, advisors, investors, shareholders, just really, really thrilled by what we're doing and what we're showing and showcasing at the West Kenya project. So it's one to keep your eye on. There will be ongoing updates throughout the year and another one next month. Yuri will now take us through the West Kenya slides and a bit more on the exploration. Yuri?
Karibuni sana, Kenya. Welcome to Kenya. So what we can see in this slide is a long section of the deposit which we're exploring, calling Bushingala and Izulu. So the long section is 2 kilometers long and approximately 1 kilometer deep. So you can see this resource outlined with the yellow outline. And what we can see on top, these red boxes, they are highlighting the current drilling, what we are doing as a phase 1 of converting the inferred low confidence reserve into the higher category, which with the aim to converting them to the mineable reserve. So we're finishing now the stage 1 of these red boxes and moving into the next stage, phase 2, these blue outlines below for the deeper levels. What we can also see on this slide are the exploration targets and upside potential, which is very, very important. We have to remember this discovery is just a baby. It's just 3-4 years old, and it has a big way to grow. All of the greenstone deposits, usually they're growing from smaller to bigger. So this exploration targets shown here as black dashed circles in 3 categories. The number 1 is a very exciting category of targets inside of the known ore bodies for the very high-grade shoots, and the example of it we will be showing next slide. Next one is just extension, number 2, extension of the known ore bodies down deep and down plunge. And number 3 is the new targets which can be converted into the resources with the more drilling. And next slide, please. Next slide will be, I think it's still coming on the, yes, thank you. Next slide is showing the example of the high-grade shoots. Left picture is demonstrating the geometry of the highest grade intercepts and the area where we encounter visible gold and white and high-grade gold values. So this is about 900 meters vertical extent, what we can see on the left picture. And until recently, we were thinking that very high-grade shoots are mostly potential in the deeper levels, This is a solid black line, type 1 in the yellow box. And inside of this black line, we have multiple, a few dozens of high-grade intercepts with the amazing gold nuggets and gold constellations in the core, which is quite rare for this type of the deposits. So this lower couple of pictures show the example of these amazing nuggets in the core. Until recently, we were thinking that would be the main potential for the high grade, as I said. However, recent results, which were published this morning, show that it's not quite true. We have this same potential for the amazing high grade shoots upstairs as well in the shallower level of the deposits. And one of the best, which Eric already mentioned, is shown here on the slide on the right up side. So what is good about it? It's not just only one sample, which is pushing the whole intercept up with the grade. You have a series of very high grade samples, 53 grams, 185, 440, 200 grams. We triple check all of these results in the lab, running the duplicates and running the rejects. And we confirm all of these numbers are true. And it's no wonder, because it's so much visible gold through the whole location. So I must say that what I am doing now, exploring for gold, I am doing for 35 years across 5 continents. And I never seen so much visible gold in the core for these stages. It's usually on the next stage when we already have a mine and we're drilling known shoots. But in this early stage is quite unique. And it gives us a very good hope that these high-grade shoots, even small, they could be a game changer for the deposit and bring this whole economics up. And next slide, please, Eric. I think it's coming now. Next slide will be showing the step out. So we have a big exploration ground. It's not only, here we are, it's not only Izulu and Bushangala. As you can see on the left picture, we own the exploration licenses for about 80 kilometers in the most prospective part of the what we call Busia Kakamega Greenstone belt in Kenya, completely underexplored. So we're exploring here since 2015 with a lot of drilling, and we identify numbers of very exciting targets, and some of them are already kind of pre-resource stage. An example of it is shown on the right side of the picture. It is Ramula, which is a genetic analogy of the wonderful discoveries are still happening in Canada, in Val-d'Or district, which is more 100 years old, mature mining and exploration district. We have this absolutely the same twin genetic style deposits, and they're very difficult to find, but they're relatively inexpensive to explore because every hole can penetrate through several potential ore bodies, several planes. So this is an unexplored camp, unexplored district, and Izulu Bushangala is just the beginning, we believe. Yes, please, the next slide. I think next slide will be where we will be moving to Tanzania. Welcome to Tanzania, which should be on the screen in a second. So on the upper right side, we can see our new Luika mine license, where we have 7 ore bodies included in the life of mine. And the two leaders, two champions are Luika and BC, which we zooming into the left side of the slide. This is the inclined view inclined view or looking along the faults. These faults are displacing the ore bodies. I just joined the company a few months ago, 5 months ago, and I'm really excited to see that proper 3D modeling and detailed logging and combination of many different exploration methods can really bring a lot of upside potential there, especially for the deep extensions and as well as for the blind ore bodies. So what is interesting on this left slide, this is an example of this 3D modeling, which is delivering us amazing opportunity. This fault, which is running from left side to the right side of the slide, is displacement. So the ore bodies were chopped along this fault. However, detailed review shows that they must have extension over this fault on both sides, and deeper, higher grade shoots should be coming. So we are drilling now with 4 drill rigs there, and it's all included into the big tenement package surround this mining license, which is more than 1,000 square kilometers. So please stay tuned for the new press releases about our drilling results. And asante sana, thank you.
So this is the Singida project, and this will be our next mine in Tanzania. We think this is a pretty significant project because it'll bring the group production up to over 100,000 ounces a year. And it's also going to be a significant contributor to cash flow. So we're expecting in 2023 for Singida to contribute 30 to 40% of Tanzanian cash flow. Now, what's also exciting about this project is that we'll start off with a relatively small level of production, but the exploration is very exciting, and we expect that we will have opportunities later on to increase the production, increase the reserves. So this is a greenstone belt with very high potential. We'll bring it into production at the end of next year. So it's this will have a very significant bearing on the company's profile. Next slide, please, Eric. Thank you. Now, we're 2 months into a new presidency in Tanzania, and this is there's been some pretty significant changes already. The new president is very pro-business. She's been specific about trying to entice miners back into the country, and she's also talking about VAT. As everyone, I believe, is aware, we have a significant VAT receivable. It's around $30 million today. Now, what I can tell you is that the auditing is continuing on I guess, as a new business as usual for the government, and we believe that already we have implicit approvals for some of the VAT. So we'll update the market in due course, but there's been significant progress on that front. I think the final point that I'd like to make in terms of the new president is that she's also committed to bringing mining up from 6.5% of Tanzania's GDP to 10% by 2025.
Thank you, Luke. And we'll just wrap up here on the catalyst slide to give you a feel for what to expect over the next couple of months. First and foremost, more drilling results. We expect to have another set of results out in June, probably from West Kenya and New Luika, given there's quite a bit of activity on the ground, and an updated resource at West Kenya specifically in July. We'll provide an update on an ongoing update around the Singida construction, how that's moving ahead. We've started work on a 5-year plan. It's a proud moment, given we haven't had a 5-year plan in some time, and we've now made enough progress to get to that point and have the confidence to share that. So we'll have that out in the third quarter as well, along with our Q2 results and our interim results, probably in the back end of August. With that, I'll hand over to back to the host to take any questions.
Great, thank you, Eric. That was terrific. I'm going to jump straight in and ask you, good news from the drill bit in West Kenya today. The share price certainly shot up. Was the market right to get excited about phase 1 results today as it did? On the other hand, there's plenty drilling still to go. So, was that market reaction the right thing?
We thought it was a bit soft, actually, but that's being optimist. Listen, Donald, there's scarcity in those kinds of results. It's hard to find that type of grade in a greenstone deposit anywhere in the world. I mean, you can Google it, you can look for it. They're eye-watering, really, and we have a long way to go to being able to produce the first doré bar, but this absolutely shows the value in this project. The gold is there, and it's up to us to make sure that we can demonstrate the value in this project, which I'm absolutely positive we can. It's super exciting. It's what we've been waiting for, and compared to the purchase price we had, I think we paid $14.5 million for this asset back in August. I'm sure it's multiples of that today, and it's just a matter of time.
How does it rate alongside New Luika, for example? Bigger, smaller in terms of resource potential?
Well, a greenstone deposit is always more interesting because it has the hallmarks of being bigger, whereas New Luika isn't a greenstone deposit. So, that's a big plus in terms of a starting point. The grades are spectacular. I mean, a bonanza grade is 32, 33 grams per ton. This is 8 times as good as that in places. And, we already have a huge head start with a 1.2 million ounce resource there. Granted, it's inferred, but, this is, as Yuri said, this was discovered 3 or 4 years ago, and we're literally just scratching the surface.
What are your next steps in West Kenya then?
Well, we've committed to drilling. And so we raised money to do that last October. So we've committed to drilling up to 150,000 meters. Again, as I said, we've scratched the surface. We've done, I think, now 6,000 or 7,000 meters of that, small amounts. And we'll continue to provide updates. At some point soon, we're going to have to transition to thinking about studies. How does this project look? What are the steps we need to do to get through permitting? Social acceptance, bringing this project on a path towards production, because we're getting enough confidence that this will, this very well could be the first major gold mine in Kenya.
Would that count as a tier 1 or a tier 2, or do you not see these terms as relevant?
Well, I mean, in my view, tier 1, according to Barrick, is 10 years at 500,000 ounces of production per year. For me, what matters is that the asset is highly economic. So this is a profitable asset. It can be constructed. The capital is sufficiently manageable, which it is. We have the right skills because it's long hole open stoping. So we have that. We can borrow that from Tanzania, and we have the right culture and the right recipe. So we have this. We have a playbook that works extremely well in Tanzania around local content and being supportive of government and community, and that's something we're rolling out in Kenya at the same time. Mining is a long-term game. To try and think you can figure it out in a couple of quarters is absolutely wrong. Okay. You have to think 10, 20, 30 years.
That's a good answer, Eric, which takes us neatly to Ben Sharman's question. And he says, so what are the timescales to bring on production at West Kenya? Will the ore be processed at the site or shipped to the processing plant in Tanzania? I think he's thinking very far in the future, but nevertheless, have you thought about those things?
We certainly have. And, part of that work was we announced a scoping study back in October for the West Kenya project, and it will be a standalone project. It's too far and it's too complicated crossing borders with ore. But what we said back in the second half of last year, it's probably 0 to 5 years away from production. So now here we are, 8 months later. So we're coming towards the 4 years to production. We hope we can do it quicker than that, but we don't want to make promises that we can't keep. So, we're going to stick with that. What's important is that we're demonstrating value along the way, And this project is seriously exciting with these kinds of grades.
Okay, hopefully I'm not going to completely take you back here, but could you take us back to the slide where Luke was talking about the new president, please? He talked about 30 million of revenue, of VAT revenues due, and my question, and he said some of it he thinks is going to come back, and so of course my journalistic brain goes, to what extent can you tell us how much of that VAT do you expect to be able to get back, Luke?
Yeah, Donald, I can't say much more than that, other than nothing's confirmed so far. There is an element of interpretation in kind of legally what's defined as being implicitly approved. So it's something we're working on now, but we're feeling pretty good about it, and we'll put something out in the near future. Sure,
as soon as you can, yeah. Okay, but is it possible to talk us through how potentially important the role of the new president might be? She seems much more business friendly president.
Yeah, look, absolutely. We're seeing it, on the ground every week. We pay a lot of tax in Tanzania, and for us, things can either move quickly with permitting or they move slowly. And what we're seeing is she wants to reduce the tax burden on individual companies, and she wants to find other ways to broaden tax collection. So, we're seeing much more activity with the Tanzanian revenue, and a lot of encouragement on Singida as well. So, things are looking very good so far.
Fantastic. Okay, back to Eric. An overview question. There you go. You'll be relieved. An easier one. Where are we in the current gold cycle as you see it? And to what extent does the gold cycle influence your forward planning?
Yeah, it's a good question. I mean, listen, our view is, we're wild optimists when it comes to gold. No surprise given we're running a gold company. But the reality is we can't predict the gold price as much as we want to. Our job is to produce the gold as profitably as possible and to be good custodians of capital for the shareholders. So the best way for us to mitigate any gold price volatility is to keep our costs down and to keep the gold being produced. And it becomes a relative game at that point, because anyone who isn't doing that will be significantly worse off. Now, what I can say is that for the first time in a very, 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 very long time, Shanta is unhedged, as of December last year. And when you look at the fundamentals for gold, you see, the crypto is kind of self-destructing. Gold's been around for a long time. You might think that gold has a pretty good future. I do, but we'll have to all see.
Okay. What would the if we're coming to your last question essentially, what would be the last thing that you would like to say to your audience tonight? Perhaps it's an investment summary. Perhaps it's why you should hold the Shanta Gold stock. There you go. Over to you.
Yeah, keep your eye on the exploration, because it has the opportunity, or it has the potential of generating multiples on your money. There's only one way to do that in mining, really. It's exploration. It's not production. Exploration and gold price is the source of all riches historically. So keep your eye on that. That's why we're spending a lot of money in that department. And
you're not just a producer, but you're actually actively exploring at the moment. You think that's where you get the best return on your money.
Absolutely, yeah. If you get it right, it's it's phenomenal returns. If you get it right.
Okay, and if you had to sum up Shanta Gold in 30 seconds, how would you do that?
Well, we're a fully funded gold producer in a region we know incredibly well. We've been operating for 20 years. A diversified portfolio of fantastic assets. A team backed by incredible skill. Yuri's on the call, and a playbook that's worked very, very well for us. And so when you look at the fundamentals, the valuation entry point, the fact that we pay a dividend, we're unhedged, greatly exposure to gold price, and the exploration, which is the one that can really drive a lot of value for the shareholders.
Okay, Eric, thank you so much for that summary. I'd just like to say thank you to Eric Zurrin, the CEO. I'd like to say thank you to Luke Leslie, the CFO, and a special thank you to Yuri Dubrotin.